Good morning, students. How are you all? Hope you all are fine. Very good, students. In, in the 13th lesson, we have completed around 9 adjustments, isn't it? Today, we will learn the 10th adjustment and we will try to do the problem. Okay. The previous day's problem, that some mistake is there in the problem. Okay. So, we will correct it later. So this one, the 10th adjustment is depreciation. I think we have studied one full lesson about depreciation. So you know the adjustment entry and the transfer entry, and what is the depreciation also we know. Just a recall, I will tell you what is depreciation. A reduction in the value of fixed asset due to either usage or passage of time. Usage of the fixed asset also, it will get depreciated. The amount decrease in the amount of the book value of the asset. Okay, so the depreciation occurs either using of the fixed asset or just the time, the expiry of time, the fixed asset. Even if the asset is not used in the business, and if we kept as idle also, it will get depreciated. Okay, so it is a loss for the business. Okay, it is a loss for the business, and the same amount will be written off from the book value of the asset. In the asset side, we should, when we show the asset on the asset side, we have to write off the depreciation amount from the book value. Okay, the depreciated value only will be shown on the asset side. Okay, that original cost minus depreciation is the book value. Okay, then next year again the a certain percentage will be written off. Okay, in every business house a certain percentage will be deducted from the value of the fixed asset. That is called depreciation. Okay, what is the adjusting entry? Adjusting entry we have already learned, isn't it? Since depreciation is a loss, we need to debit depreciation account. Debtor to fixed asset, concerned fixed asset. If it is furniture. Then if it is machinery, we have to write their machinery account. Okay, then depreciation provided. Okay, then next this is the adjusting entry. Next one, transfer entry. Transfer entry, we need to transfer this depreciation. So we need to cancel this one. So it will be credited, and it is a loss. So we need to debit the profit and loss account. Profit and loss account data to depreciation. Depreciation transferred to profit and loss account. Okay, then the presentation we should know. Okay, here two entries, adjustment entry and transfer entry. The already we have learned for other two things we have that adjusting entry and transfer entry. What are those two? The interest on capital and interest on drawings plus this depreciation has two entries. Okay. Then how it will be presented in the final accounts? Presentation in final accounts. Final account. Wow, it is shown on the in the profit and loss account only because it is a loss. Okay. So in the profit and loss account we need to debit to depreciation. Okay. Then in the balance sheet from the fixed asset you have to deduct the depreciation. We need to write the net amount. Okay. Then sometimes if the depreciation is inside the trial balance, if the depreciation is shown in the trial balance, this is the trial balance, depreciation, it is a loss. So they will write on the debit side, trial balance, isn't it? So if it is shown in the trial balance, all the other items already we have learned. For example, the outstanding salary, if it is shown, where we will write? We will write only in the balance sheet, in the profit and loss account, and in the trading account we will not enter. Okay, but this is the just reverse. Okay, if it is shown in the trial balance, what we have to do? That means the adjusting entry is already made. What's the adjusting entry? Depreciation account debtor to fixed assets. That means they have debited depreciation account and fixed asset account also deducted. So we should not show this one in the balance sheet, but only this transfer entry. We have to show only in the profit and loss account. Okay, so in the profit and loss account, we should show to depreciation. Okay, in the balance sheet, it will not appear. Okay, if it is shown in the trial balance, that means the meaning is that they have made the adjusting entry. Adjusting entry is depreciation account debtor to fixed asset. So that is why it is shown on the trial balance. Okay, so already fixed asset is deducted. So we should not show on the balance sheet, but we have to show only in the profit and loss account. Okay, so now we will do the problem, 10th problem. Okay. The 12th problem we will do. Okay. See, Arun traders, that trial balance given. See, the trial balance is get tallied. Okay. 1,18,250. So here we do not have any chance to get a wrong answer. Okay. Prepare trading and profit and loss account and balance sheet. Plant and machinery, wages outstanding. Half of repairs and maintenance paid is for the next year, then closing stock. Okay, we will start doing. So just we will read the items. Buildings, plant and machinery, cash purchase, credit purchase, sales, bills receivable, coal and water, office expense, rent received, carriage outward, repairs, maintenance, wages, debtors and creditors, same line, cash, then capital, opening stock. Okay, only cash purchase, credit purchase. Then one that both together, cash purchase, credit purchase, sales together. Okay, only one item. So in the books of Arun traders, first we will write the number 12th problem. Okay. Trading and profit and loss account. For the year ending 31st March 2018. Okay, you have to write particulars, rupees. Okay. First item, 2, opening stock. Opening stock. The last item, 13,000. 2, purchases. Cash, 30,000. Credit, 8,500. Any purchase returns? Nothing, isn't it? So add and write 38,500. Then 2. Direct expenses. Bills receivable, coal and water. This coal and water is used in the factory. Okay, so we have to take as the direct expense. Coal and water 1,625. Office expense, rent received, carriage outward, repairs, maintenance, wages. So wages there. Okay. For wages, adjustment is there. So we will write inside. Okay. Wages 9,250. Then wages outstanding. Add outstanding 750. So 10,000. Okay. Then after that wages, no, not that thing. Then by sales. Only one amount, 63,250. By closing stock. Closing stock is the last adjustment item. Okay, adjustment item will appear in two places. 15,000. Okay, here 38, 48. Here 63. Okay, 73, 78 coming. So this side only more, isn't it? So add and write. 2, 8, 7, 78,250. Okay. 2. Gross profit carried on. 5 plus 5, 10. Balance 1. 3. 3 plus 2, 5. Then 5, 11. 11 plus 1, 12. Balance 1. 4, 12. 13. 13 plus 5, 18. Balance 1. 2, 2 plus 3, 5, 5 plus 1, 6, 6 plus 1, 7. So 15,125. That we will write here. By gross profit brought down 15,125. Now we will write the profit and loss account items. Okay. From the top we have to come. Sales, bills receivable, coal, water, office expenses. So to office expenses, any adjustment is there, we have to see. Office expenses, no adjustment, 5,250. Then rent received here. Rent received, there is no adjustment, isn't it? Rent received 1,750. Rent received. Carriage outward. Carriage outward also no adjustment. Carriage outward 2,875. 2,875. Then repairs and maintenance. We have one adjustment, so we should write inside, isn't it? 500. Then half of repairs paid is for the next year, so less prepaid next year's we need to deduct. Half means 250, so the remaining 250. Okay, then wages already taken. Debtors, cash, capital, opening stock. Okay. Now come to the adjustment. First one, depreciate plant and machinery. So that one we need to write. Depreciation on plant and machinery. You write fully. Okay. Depreciation on plant and machinery 20%. What is the amount? Plant and machinery 12,000. If it is 10%, 1,200. So double 2,400. Okay, 2,400. 20%. That's all. Wages outstanding we have written. Repairs, maintenance. Okay, now we will total and balance the profit and loss account. This time also credit side only more. 5, 7, 8, 6, 1. $16,875. Okay, 2. Net profit 5, so 0. Then 12, 17, so 0. Balance 1, 3, 11, 13, 17, 1, 18, balance 1, 3, 3 plus 2, 5, 10, 10 plus 6, 16. Okay. Now next one, balance sheet. As on 31st March 2018. Here assets, here liabilities, rupees, 2 column. Okay, need. Then come from the trial balance first item, buildings. Buildings no depreciation, so write the full amount, 17,500. Next one, plant and machinery. You write fully. Okay, plant and machinery 12,000. Then less depreciation. Okay, 2,400. So 9,600. Okay, then purchases, cash purchase, credit purchase we have entered, sales entered. Now bills receivable. All the trial balance item will appear once in the final accounts. Okay, bills receivable 6,750. Coal, water, office expense, rent received, carriage outward, repairs, maintenance, wages, everything returned. Now debtors. Debtors 9,000. Immediately we will write the creditors here. Otherwise we may forget. Okay. Creditors 8,500. Okay. Creditors. Then cash. Before writing cash, we will write the closing stock. Second place. Adjustment item will appear in 2 places. Okay. So now 15,000. Now we will write the cash, we will write last. Okay. Then outstanding liability. Then repairs and maintenance paid is for next year. So prepaid repairs and maintenance. How much? 250. Okay, closing stock we have entered. Now we will write the cash. Cash 2,000. Now this side. Okay, we will write the other adjustment. Depreciation we have entered. Wages outstanding. That is outstanding wages. That is a liability. 750. Then repairs, maintenance, prepaid we have written. Closing stock we have written. Now the last item, capital. Okay. Capital we will enter in the inner column. 44,750. Now add net profit. Net profit must be added. 6,100. $50,850, isn't it? We will write down. We have to draw column and write. Okay. 5, 8, 10, balance 1, 5, 50,850. Now we will add and check the amount. The balance sheet should tally. Okay, 0, 5 plus 5, 10. 5, 10, balance 1, then 6, 12, 19, 21. 21, balance 2, 4, 9, 18, 24, 33, 40. Balance 4, 5, 6. We will check whether the amount is coming this side also. 5 plus 5, 10, 9, 16, 21, balance 2, 10, balance 1, 6. Correct. Okay. Balance sheet got tallied. Okay. Now we will see the 11th adjustment. Before going to the 11th adjustment, we will do the exercise 1 and 2. Okay, exercise 1 and 2 we will do. Okay. Pass adjusting entries for the following. The closing stock, outstanding salaries, insurance prepaid, 20,000 was received in advance for commission, accrued interest on investment. Okay, here for the closing stock, we have only the adjusting entries they have asked. Okay, so we should write the adjusting entries. Why I am not starting with the 11th adjustment? 11th, 12th, 13th and all related. Okay, so we can, if we do the 11th adjustment, we can start with the third exercise. Okay, so before starting the third exercise, let us complete the first and second exercise. Okay, the adjusting entries. Then rupees. Debtor, creditor, isn't it? Debit, credit. What is the adjusting entry for closing stock? Closing stock is an asset, isn't it? So, closing stock account debtor to trading account. To trading account. Then closing stock adjusted amount 5,000. Then the outstanding salaries. For outstanding salaries, we need to pay. So, salary account must be debited. Salaries account debtor to outstanding salaries account. Outstanding salaries adjusted. Okay, amount 150. Okay, then C, insurance prepaid. So we need to credit the insurance account. Then insurance prepaid we need to debit. Okay. Insurance prepaid account debtor to insurance account. Insurance premium actually. Okay. Insurance premium prepaid. Insurance premium prepaid adjusted 450. Then 20,000 was received in advance for commission. Okay, commission received in advance. That one we need to debit, isn't it? Commission received account debtor to commission received in advance. In advance account. So commission received in advance adjusted 20,000. Then E, accrued interest on investment. This one, what is an income, isn't it? We need to receive. So again we need to credit that income. What should be debited? Accrued interest on investment. Accrued interest on investment account debtor to interest on investment. Then accrued interest on investment adjusted 1,000. Okay, then the next exercise also we will complete. Okay, outstanding wages. So we know for outstanding wages, wages account should be debited to outstanding wages. Okay, outstanding wages adjusted 5,000. Then we depreciate machinery. Here they have asked only the adjusting entries. Don't write the transfer entry. Okay, adjusting entry is depreciation account debtor to machinery account. Machinery account, depreciation provided 1,000. Then interest on capital. This one, interest on capital. Interest on capital is an expense. So interest on capital account debtor to capital account. Okay, interest on capital charged 5% on 20,000. If it is 10%, okay, 2,000. So 5%, 1,000. Otherwise you have to calculate. Okay, how? 20,000 into 5 by 100. 2 5s are 10, balance 2 0. Okay, 1,000 we will get. Then D, interest on drawings. Just opposite, isn't it? Then capital account debtor to interest on drawings account. Interest on interest on drawings charged. Okay, 50 rupees. Bad debts. Bad debt is a loss. Bad debts account to sundry debtors. Bad debts written off. Okay. $500. Okay. So all the adjusting entries, first two exercises you have completed. So then tomorrow onwards we will learn the next after the Pongal holidays. We will learn the other 5 adjustments. Okay students, so try to do the problems. Thank you very much.